Hello, good morning, everyone.
Good morning.
Yes, can you all hear me?
Yes,
Yes, we can. Hello, hi.
Thank you very much for joining the webinar today. I just want us to allow for 2-3 minutes to allow others to join. Then afterward, we can kickstart the webinar. Thank you very much for joining.
Thank you.
Good morning again. I guess we can start, and we hope the rest will also join us as we proceed into this conversation. Today, again, I want to welcome you to the one-day webinar on crypto compliance, risks and compliance, and exposure management. Today, the idea is to make sure we engage with financial institutions across Rwanda to bring them up to speed in terms of knowledge and understanding on crypto activities from Rwanda or even externally as well. And I believe with several experts and conversations we're going to have today, we're going to really exchange a lot of knowledge and see how we can improve in different services in terms of compliance for the country itself. Rwanda has continued to position herself as one of the tech destination on the continent, and I'm sure we want to continue that position and that conversion moving forward as well. So to start this webinar, so that we don't take much of our time, I'd like to welcome Mr. Eric from the Rwanda Bank Association to welcome us to this webinar, and afterwards we'll follow. Thank you very much. Mr. Eric, please.
Yeah, thank you so much, Kayode, and the team, the organizing team. Thank you everyone for making it happen to attend this webinar. My name is Eric Nyongira. I am a Research and Partnership Officer at the Rwanda Bankers Association. And I'm glad that at least we have now this webinar on the crypto asset compliance risks and the exposure management. So nowadays, the world is really moving very fast and a lot is happening in the space, and especially in the financial sector. We are seeing the way, as Kayode said, cryptocurrency rising up. We're seeing a lot of initiative coming up with either in blockchain, in cryptocurrency, either in asset tokenizations. But how do we comply and make sure that we are also being on the safe side, avoiding either some cyber threats or other risks that may come up? So that's why we are happy to have the team going to take us through this webinar and learn how we can really identify and manage some crypto-related risks and enhancing the compliance processes. So without taking much of your time, since we have 1 hour and a half, I'm going to give floor to the trainers, AD and Chain Analysis and Blockchain Institute, to take us through this webinar, and I hope we learn a lot from them. Thank you so much. I hope we have a very productive webinar. Thank you.
Thank you very much, Eric. Again, for me, as a form of introduction, My name is Kayode Babarinde, and I work with the Africa Blockchain Institute as Executive Director. And of course, more of our activities involve building capacities around blockchain technology all across Africa. And again, this webinar was made very possible with our partners, A&D Forensics, and also Chain Analysis, which will be introducing themselves afterward. And much more, we'd like to thank the Rwanda Bankers Association for making this possible to collaborate with them and reach out with several financial institutions all across Rwanda. So I'll stop here to bring on floor Mr. Adedeji Owunubi to please welcome us and tell us more about A&D Forensics.
Thank you, Sir Kayode. I think the chairman will do that. I will come up to do the little intro to the jargons on blockchain before chain analysis come on board.
Thank you, sir. Good morning, everyone. This is Chama Onyekelu from A&D Forensics HQ in Nigeria. A&D Forensics is a blockchain, Africa's leading blockchain intelligence service provider. And we offer services ranging from blockchain intelligence, we offer crypto investigation services, crypto compliance services, and as well training services like we are all here gathered for. We are also involved in penetration testing, that's for cybersecurity and vulnerability assessment of platforms. And over time, we have trained law enforcement agencies in crypto investigations. We've worked with Interpol, we've worked with law enforcement in Ghana, Kenya, and as well in Nigeria, where our headquarters is. And we take pride in these as well. And also we're partners with Chainalysis. In fact, we're Africa's first investigative partners for Chainalysis, and we're also glad to have them on this call with us. And in case you want to learn more about us, you can also visit our website at www.adforensics.com.ng. And you can also follow us on our social media platforms as well to learn more about us. Thank you.
Thank you very much. Thank you very much. So I think without wasting much time, we can just go straight into what we have today. Let me see if I can share my screen. Is my screen visible?
Yes, sir.
Yes, please.
Okay, thank you. Okay, so good morning, everyone. I think we are managing the time so strongly. Good morning, and now it's a pleasure to be here today again. And we just want to share some things within ourselves and see how much we can bring the Rwanda Bankers Association to speed about the risks within digital assets. And like they mentioned, A&D Forensics and our partner Chain Analysis, we've been doing this across different African countries, and we're glad to also be doing the same with Rwanda Bankers Association. So the topic today that I just want to talk about between 10 to 15 minutes, where I can bring in Chain Analysis to show us the practical thing, because I think less of the talk or more practical issues about what we should be doing should be more important for us. So digital asset risk compliance for financial institutions. And I want to always want to start with this quote, which I carved out in one of our training. A bank's failure to prioritize cryptocurrency risks and compliance is not just a regulatory oversight, it is a direct threat to its reputation, operation, and customer trust. In this era where digital assets fuel both innovation and crime, banks must act as vigilant gatekeepers to safeguard the financial system from being exploited for money laundering, sanction evasion, fraud, etc. And I think this came up with in the discussion I was having one of the very oldest banks in West Africa. And I shared this, and I felt it will encapsulate most of our discussion going forward, and I decided to actually bring it in. So before we layer most of the things, and I know maybe few people will be maybe new to it, and maybe few within the Rwanda Bankers Association will be familiar with the blockchain and cryptocurrency jargons, but let's just dwell on this in a few minutes. So in Financial Action Task Force decided that digital asset definition should be the representation of value that can be digitally traded, transferred, or can be used for payment and investment purposes. I want to go with this clear, effective definition. So this is just the characteristics of Bitcoin, but you can take it on around the decentralized, the cryptocurrency that are on the blockchain, and these are a few characteristics or features that will underline what that is. But I'm using here the surrogate as Bitcoin, that is the main, the first of all of them. One, it is decentralized, meaning it is not stored in one place, meaning the central authority that authorize and approve it is not in one particular location, but distributed across the globe. And so it means, what it means in the banking parlance is that the server that fuels the transaction around your banking halls and everywhere, today we may possibly have it in one of the bank headquarters or somewhere around the city, or maybe in a different city, but these have thousands and thousands of those servers stored around and enabling transaction every time, 24/7, every day, no weekdays, no closing hours. And so that's one of the characteristics. So that also explains to you how fast transactions can go. While we lock our banks, transactions are done, the crypto world is still going on. Two, one of the characteristics is that it is open source. So meaning the code and the programs that runs it is open to everyone. People can contribute to it, people can see it, people can, interrogate it. And unlike what we have in the centralized or traditional finance, where people don't have access to it, and it's only the people permitted, actually, they can see. It is math-based because it is a mathematical computations, that put together the source of truth. And so we say we trust math and not anyone else, because it is hard-coded within the solution itself. So it is clear that it is borderless, and which is great from the decentralization that we said. So it's not restricted to a particular location. It's censorship resistance, but yes, that is a very contentious word that centralized authorities actually frown at. But of course, you hardly want to be able to censor who sends what, but we can be able to follow through with law enforcement and some other tools, like what Chain Analysis is doing, to make sure you're able to know who is doing what. It's pseudonymous, meaning you don't see names attached to it, but you can see transaction, like we say, it's open source, anyone can see it, but you don't know who and who is doing what. And that is where Chain Analysis come to play, to actually attribute that to few entities, to who is controlling what, and another layer to actually check this. So, and this new technology, there's a saying that I used to have that, okay, we have new money, be sure that we're going to be having new crime. So I call it new money, new crime for digital asset. And so few of the risks that you possibly will be encountering as a bank is, one, maybe potential money laundering, because people can use it all around the world. It's borderless. And again, the banking channel today is not too popular that people collect all kind of crypto as payment. It is happening in their thousands, but it's not very universal like cash out. People still want to handshake banks to get their money for possible use cases. And so for that reason, banks are now standing a very big risk of being used for money laundering. About 23.8 billion US dollars were said to have been used, being washed through crypto funds, and of course through different financial institutions. Scams, that is happening every time, and I think this year is going to be bigger with ransomware, with hacks. A lot of things happen, and then you wouldn't want to use your bank as a conduit where these criminal elements actually have a proper use for those activities. Of course, drug abuse, illegal use, exit scam, there's a lot of them, and I think that will be happening as that comes on board. So let's juxtapose cryptocurrency versus the traditional risk checks. What happens? How do these transactions happen? And I just decided to put in this very short table. And if you look here, so people can deposit cash into your bank, and this cash is actually coming from a conversion of cryptocurrency that could be for money laundering, from illicit activities, from darknet market, but I will put it in there through wire, through SWIFT, through account, through cards, through a lot of things. And you can see here that Rwandan franc comes into a bank here as deposit. Innocently, you may say, but again, it's coming from a very fraudulent end. And of course, your customers also moving money out to some fraudulent crypto activities, they will pass through your system, and they will swap that to cryptocurrency here if you're seeing. And so all those could be legitimate activities, right? And so there could be great activities, and your rails are assisting people to actually do a kind of cross-border, assisting people to do some e-commerce transaction, investments, payments that are legitimate. But of course, underlying that are activities like terror financing that you can see here, trafficking, darknet market, money laundering, and of course, you want to know these risks that are you part of the people facilitating that with your banking infrastructure? And so those are the reasons why this particular training is very, very critical today. So there are key aspects of digital asset compliance that we think banks that decide to work with crypto should understand. Of course, regulatory frameworks, AML, CFT, compliance, smart contract auditing technologies, a lot of activities, transaction monitoring, which will be dealt with a lot here. And of course, training to understand the nuances and the new things that are happening around the globe, really. So if you look at this little, and this is where the meat is, in my view, the network-driven approach to fraud and risk mitigation that has to do with cryptocurrency. One, you possibly want to look at the payment types that comes into your bank. Is it card? Is it coming from crypto? Is it coming from account to account, etc.? And how do you check the card activities that move in batches, real-time payment, cross-border functionalities, where interaction do they have as this is happening? And how do you prepare yourself to onboard people that are genuinely running crypto activities? Is it direct deposit? Is it from cards? How do people actually come through your bank without you knowing, and all that? And I think this will be dealt with. I like to end with this crypto maturity journey, and which is also a small cap from chain analysis. And I think there's a lot that banks should actually take. And I've been presenting in most of the trainings with banks. I just had one this week, also to a board strategy session. And of course, most of the banks, from my understanding, they are still at level 0, really. So you have one level 0 to level 4 that we think you will go through to be mature to actually deal with crypto properly. But I think we're scratching the surface around level 0, which is education and strategy of what we're doing today. And then you can be set to be open for business to serve this larger Gen Z, new generation, young people that are digital natives. And of course, for you to be open to business, allow the retail activities to deal with it. And then you can begin to do on your own some varieties of crypto products. And of course, you can even begin to now have to custody like big banks, JP Morgan, NY Mellon, Deutsche Bank, Standard Chartered. They are currently at level 3, in my view. And beyond that, you could do a lot of things. So, but here, we're looking at the education part, where you need to possibly designate a team or two to begin to look at this. And then you as a bank, you run a crypto risk exposure and crypto risk assessment, which I think our team here will be able to assist you with our partner chain analysis to get that, for you to even understand what is happening within your banking sector to start with. Because a lot of banks have this denial that, look, we don't facilitate crypto, and I think crypto is illegal. They will tell you all that. But again, you see a lot of volume passing through the same bank without the banks themselves aware that this is happening. So thank you very much. I want to end here and welcome our chain analysis to actually take up the presentation.
Thank you very much, Adeji. That was really brilliant. Thanks a lot for the sharing, actually, the impact and the importance of blockchain when it comes to the banks and the bank exposure. So quickly about myself, my name is Zakaria Elawi. My main role is Senior Solution Architect at Chainalysis. I've been with this company for almost 3 years now, and working across the African continent when it comes to cryptocurrency, first for the crypto businesses when it comes to crypto risks and threshold and alerts that they need to set to be able to be compliant with regulators. But at the same time, I work a lot also with TradFi banks and financial institutions across this maturity level, right? So let me quickly share my screen here, and I'll just walk you through a few slides here. So as my colleague earlier mentioned, Adeji, I'll let you actually do this assessment and know where you are in this stage. And from my perspective, what I've seen be it on the African continent, be it in the Middle East, is that most companies today, or most banks today, financial institutions, are, let's say, around level 1 and level 2. Okay, so level 0 usually, okay, we want to get educated on crypto, want to be able to, get familiar on understanding what is this new industry is about and how it impacts us. But after that, they want to open businesses. Sorry, they want to open for business. They want to be able to onboard crypto businesses and start interacting with crypto businesses and so forth. Then it means that they need to be able to assess their risk level and knowing if this crypto business is legitimate or not. Okay, I see maybe there is a chat here. Yeah, that would be brilliant. If you have any questions, please feel free to ask your questions there. So, and I want to continue. The level 2, we see actually banks already offering crypto. Actually, not longer than last week, actually, I was able to buy some crypto directly through a bank here in the Middle East. But these are more like synthetic crypto products. They don't really do any custody. It's mostly through a partner. And the last one, the level 3, would be to enable crypto deposits. Well, the bank is not only using a third-party tool, they're actually having custody. They're actually having the full infrastructure that enables crypto deposits, and they then implement the transaction monitoring. And the level 4, which is still very far from what we see today, is, okay, I deposited some crypto in the bank, and now how can I use that crypto into the DeFi world? Can I buy, I don't know, let's say some NFTs with the crypto? Can I go and interact with the lending protocol in crypto? Can I integrate with anything related to decentralized finance? Can I bridge into another crypto directly to these beyond deposits? So you see, most of the banks today I speak to, mostly level 1 to level 2 to some extent. Okay, why is it important? That's what I like to say. Usually every bank is exposed to crypto. Technically speaking, any bank that you will talk to will tell you, well, we don't hold any crypto, so we're not really impacted. But actually, they are impacted because when you look at the volumes of crypto transactions today, the volumes of transactions and transfers, we're talking trillions of dollars. The market cap as of November 2024 was $3.3 trillion. The ETFs that are enabled by some of the biggest asset managers in the world are reaching $200 million of net inflows in one single month, right? One single month. So obviously, all this crypto is actually coming also from fiat transactions. At some point, it was fiat that was converted into crypto, and that crypto at some point might be also, let's say, moved to fiat. And of course, when you look at on-chain, what is happening on the blockchain, some of these activity is going to be illicit. $24 billion were received by illicit addresses, right, in 2023. And then if you look at the categories, we have everything from sanctioned entities, sanctioned jurisdictions, terrorism financing, and many other addresses related to illicit activity. So what is the main issue today with banks, especially today in Rwanda? You will see a small percentage of your total exposure to cryptocurrency businesses. Why? Because you don't have necessarily the data to know if this transaction, this fiat transaction, is going to a crypto business. And then you might have maybe a watch list, right? You might have a watch list from let's say a bank in Rwanda saying this money is going to Binance. Okay, Binance, I know it's a crypto exchange, but what about all the other crypto services that you might not know about? And this is exactly what we do. So if you look at these entities, Evogate, Matbea, Nominex, Cortex, GetSome, Gvoice, Sniff, Financial, Oasis.club. So all of these services are sometimes no KYC exchanges, fraud shops, scams, and the bank clients can buy anything with a bank credit card or debit card directly from these services. So to give you an example, this is a service called cashbank.pro that allows the bank or the customer to exchange their crypto to fiat. Okay, so here I give away some Bitcoin and I'm going to receive some fiat. Here's my credit card, and that's pretty much it. Does the knows about this? Probably not. The bank doesn't know about this service. And this is why we come in. So not only you should know actually about the service, but if I'm using my credit card to send it to a high-risk exchange, what do we call a high-risk exchange? It's an exchange that don't have necessarily any KYC, for example, right? Then these funds then can move to other bad categories. They can move to darknet markets. They can move to sanctioned entities. They can also move to other exchanges or legitimate exchanges. And if you don't have the right data that can help you identify actually the name of that service, you won't be able to know that the fiat transaction, it went actually to crypto. So the value proposition that we have for banks are 4 value propositions. The first one is the training. The second one is to identify the fiat to crypto exposure. This is what we call having, like, the result would be the amount of money that is related to crypto deposit and withdrawals, and the number of services that are your counterparties. Okay, we've been doing this with a few banks with a lot of success, and this is something that we can already start with you. Hence, we mentioned the POV, for instance. And then the number 3 is the assessing the risk of crypto entity. So let's say if you want to work with a crypto business, is there like a way where you can just take the name of that crypto business, put it in a system, and then immediately get all the risks level of that crypto business, right? So this is something we can offer as well. And finally, maybe you have already some cases where, let's say, there are some fraud, some scams, people actually wiring money to some services that purely scam them, and you want to be able to investigate this. What usually happens, and I spoke to a lot of banks about this, they tell me, well, we can follow everything when it comes to fiat, everything related to traditional finance, from bank to bank, from bank to another bank, all of that is already covered. But then once it touches crypto, we are completely blind. We don't know how to follow that. I want to be able to, maybe if I get the crypto address, I want to be able to put it somewhere and then be able to follow up with the whole transaction monitoring part. So just to give you a very simple example, even if you're looking, let's say a crypto business that is completely 100% legitimate, KYC compliant, AML compliant, you see that Binance.com, they have many different names. And just for example, here, these are all some of the names that they can use. So here we have, for example, South Africa, they might use 5 West OTC Desk. Here in, let's say, in Brazil, they might use B FinTech Technology Services, or Swipe Brazil Intermediary. Or here in Uganda, they might use another name. So this is why it's important, because these are the names that appear on the fiat transactions. You might not see Binance, but you might see other names. And if you don't have these names, you cannot see what happened afterwards, right? So that's number 1, is being able to screen your fiat transactions to be able to identify what are the crypto businesses related to it. On top of that, we have a tool that allows you to assess the risk of a crypto business in less than a second. You just take the name of it. I will show you a demo later on. Take the name of that service, put it there, and then you will have the risk level of that specific setting, the service. So some of the names actually we can give you. I mean, some of the data we can give you, and I want to share with you an actual case study that happened in a bank, where actually the bank looked at all the fiscal year 2023. They looked at all transactions, national, international transfers, and they looked at. Let's just give me 1 second, please. Sorry. Yeah, sorry. So I was saying that if you look at the tests that were carried out, so we did several things. We looked at first all the different transactions that are in fiat, of course, and then out of these transfers, we looked at 7,700 transfers, right? So the amount that were involved are 44 million, and out of the 44 million, we got 254 risky transactions. Okay, and after that, when this is the most important thing, is that it is an actionable, let's say, insight, where actually the bank was able to file 8 suspicious transaction report to the regulator, right? So they were able to look at all the fiat transactions, filter out only the ones that are related to crypto businesses. And out of these, we're able to find illicit activity and then submit it to the regulator. Okay? I'm happy to take any questions if you have any questions. I know I spoke quite a lot, so please feel free to share if anything.
No question yet. I think you can, when you conclude, maybe.
Okay, that's good. So I'll continue. Let's go. All right. Oh, so let me now do a bit of a demo here. So by the way, I want to maybe also ask the question. I know this is a webinar, but happy to make it a bit more interactive. If you have a name of a service that you know is quite popular in your country, if you can put it on the chat and we can maybe potentially check it. But if you look at this tool here, we can simply screen an address quite easily, and then let's put a crypto business. So so there are many crypto businesses that we can look at. So I'll try to, for example, just look at one, like let's say a small crypto business. So one that is quite popular here. And you see, this is what we can see quite easily. So this is something very useful for the banks if they want to start interacting with this crypto business. Okay. So what do we see? We see that there is first a risk level. So the risk level here is medium. Okay. Why is it medium? It's because of the risk settings that we have already set. So if, let's say, let me take, for example, we have more than 4% of the total transfer related to fraud shops, then it will be considered severe. 3% is going to be high. Between 1 and 3 is going to be medium, right? And so on. And this, we can do it across almost 35 different categories. From darknet market, fraud shops, gambling, illicit actors, malware, no KYC exchanges, online pharmacy, and many others. Now, one of the things that is important to understand is that there are two things, the direct and indirect exposure. If I send my friend a friend, let's say, from wallet A to wallet B, wallet A has a direct exposure to wallet B. But if wallet B sends to wallet C, then wallet A has an indirect exposure to wallet C. Okay? So sometimes what you see, like especially when it comes to illicit activity, fraudsters, scammers, illicit actors, they don't use, let's say if they sell drugs online, they won't use their main wallet to receive the money. No, they will use many different wallets in between to get the funds at the end, and then they will send it to a cryptocurrency exchange, and then cryptocurrency exchange will send it to the bank. So this is why it's important also to trace the indirect exposure, and indirect exposure is something also that we can track. So we don't really care only about the direct, but also the indirect part, and we can configure the risk settings accordingly. All right. So let me go back here and just take my example again. So once these risk settings are, so why is it medium? Is because I had a zero tolerance for scam. That's why anything that is related to scam will be considered as medium. Okay. So how do we know this? If we go to counterparties, I'm able to know with whom they interact a lot. They interact with Binance and B2C2 and Kraken and Cumberland and many other crypto businesses. But if I want to look just, for example, at the scams, I can see what are the scams that are, let's say, sending or receiving money with this crypto exchange, right? And of course, the crypto exchange is also KYC compliant, AML compliant. They have a proper monitoring tool. So they are monitoring all of this at the time we speak, of course. And then if we look at exposure, this is what is quite interesting, is that we can see how the main no KYC exchanges, right, are receiving terms of percentage of total volume in illicit activity, as opposed to other KYC compliant exchanges in blue and our exchange of reference, which is RAIN. And what we see is that RAIN is doing better than most crypto exchanges and way better than any no KYC exchange when it comes to volumes. Okay. Even better actually here and here. So, and then we can come back in time, and then maybe we can check when maybe Rain.com has a higher let's say exposure or risk exposure. And this is something that, this is where a bank, if they want to interact with a crypto business, they can look at this and maybe they can ask a question, what happened here? Okay, you received a lot of scams. What have you done with it? Did you block the funds? Did you freeze the funds? Did you offboard the users? And so on. Okay, so if you need a tool that allows you to completely have a 360 view on the crypto industry and the players in the crypto industry, entity risking, this screen is really, really great. Okay, and then finally, and this is something banks will care a lot about as well, is off-chain data. If you're working with a crypto business, you want to make sure that they are at least having some license somewhere, right? And what are their legal entities and where they're allowed to operate in it? What are their official links? So that you can actually separate the scammers from the real players in the market. And here in this case, we have all these legal entities for RAIN, right? In the UAE, Turkey, and Bahrain. They have a license from the Central Bank of Bahrain, from the ADGM Abu Dhabi. This is the compliance part they have, the financial services they offer, etc. So you have both on-chain activity and you have off-chain activity as well. Okay. Now, the data that is actually powering this screen, we can send you this data in the form of a file, right? And what we have seen some of the banks we're working with, they take this data, this off-chain data, and they, as I said, they screen it against their fiat transactions. Okay, so that at the end of the day, they have this kind of results that the case study showed us. With the other bank that I spoke about, they screen the transfers. Here, how many transfers are related to crypto assets? These are the amounts involved, the risk of transactions, the accounts with a high volume of transfers, and the suspicious activity report. So this is something that you can start actually doing today. We can help you with it, right? On top of that, one other thing that I would like to mention is that when it comes to enhanced due diligence, so let's look at one specific address. So let's look at, for example, I'm just going to pick this as an example. So let's say you have a case where one of your clients have sent funds, crypto funds, to somebody, and they have their wallet address, and they can share with you their wallet address. This is something that you can check, right? So this is an example. I have a crypto address that a scammer got funds to. And what we can do is that we can look at this crypto address. We can see where the money is coming from, where is it going to. But most importantly, we can check across different tokens. So we're not limited only to Bitcoin or Ethereum. We can check virtually any major token, and even the newer ones, right? So here we are on a blockchain called Tron. This is USDT on Tron. And what we see, and this is something that could be interesting for a bank, is that, let's say if this address or the holder of this address is also somebody that has a bank account with you, you can actually check, and you see that most of the funds are coming from a sanctioned entity, right? How do we know it? It's labeled at Chainalysis as OFAC SDN Garantex.io, so it's a sanctioned entity. And these addresses are sending funds to our, let's say, potential bank client. And then the bank clients actually can say, well, I want to deposit funds into the bank. And these funds are coming from crypto. So you are able actually to do the proper enhanced due diligence to track back and trace back all of it from the beginning, quite easily, to be fair. Okay. And of course, you can see the balance. You can see how much was sent, how much was received, how many transfer happened. This is usually what we call a proper enhanced due diligence, where you actually look into a wallet. And in this case, very simply, we can see that this wallet has received most of the funds from a sanctioned entity, okay, and from some people that he eventually scammed. Now, on top of that, you can not only check an address, but you can actually check a business. So again, I'm taking another example. That's a crypto exchange. Okay, and let's add it here. So you see now I can have the view exactly what I showed you here by screening the crypto exchange. except this time I'm able to go even deeper into the transaction. So this is one view, and this is another view that will allow me to look at the transfers. I can go deeper into the activity. So here we see that there is a major slowdown on the activity, maybe starting here, okay, early to 2025, which is quite interesting to see because there was a lot of liquidation in the market as well. What we can see as well, we see that with whom they're interacting the most, what are the top name counterparties, what are the, and we can look at the names here in terms of sent and received. And all of that can be very easily assessed with this tool called Reactor, right? So checking the transfers, looking at every single transfer, filtering out by a specific date. So the difference between this view, which is essentially I want to quickly assess the risk of a business according to my rules. Here it's I want to be able to go deeper into the analysis of the crypto exchange on a transaction level, not on a high level. Okay, so to summarize the value proposition here, as I mentioned, we have the training, we have the fiat to crypto exposure, the assessing the risk of a crypto entity, and investigation and filing the suspicious activity. If there are no questions.
Yes, thank you very much. It's really very informative engagement. And
Hello,
your presentation was very solid to answer majority of the talks revolving around compliance risks for crypto activity or crypto assets in Rwanda. I see somebody already raising hand. I will allow for question and answer right now. What I'm saying is Super Ndayo, could you please go ahead and ask a question?
thank you, Khaled. My name is Ndahiro. I'm also from Rwanda Bank Association on the side of compliance arm. And I wanted to ask Zakaria just to, I think it's important to note that Rwanda has not yet,
Yes,
we don't have a registration right now, but it's in the process. And I believe maybe very soon we are going to have a registration on the virtual assets providers. So in a layman's language, I wanted Zakaria to just support us. I have seen levels up to, I think, maturity, level 0, level 1, and level 2. My question is, what should be the first steps for banks in Rwanda as soon as maybe the registration is implemented, is put in place, and how can then from the presentation, the channel analysis, solution, then as in just take us through in brief. What are the first step? What is the second step? And that kind of a roadmap to make sure that we fully comply with the digital space and also in terms of making sure that we fight money laundering and terrorism financing. Thank you so much.
Yeah, sure. I mean, the first thing I want to mention is that it's not because there is no regulation that you cannot buy crypto in Rwanda. I mean, you can buy it through different ways, of course. Potentially, there are some OTCs over there where you can give some cash and they give you some crypto. But here I'm on my MetaMask wallet, and I'm able very, very easily to choose a country. So here I'm in Rwanda, and so Transact is offering me this rate to buy this amount of Ethereum for this amount of how do you call it? Rwanda F? What's the F?
Rwanda franc.
Rwanda franc.
Franc. Okay, Rwanda franc. Yeah.
Okay.
So yeah. So you see, then I can continue with this service, and this service will allow me to spend with my debit card. So potentially one of the debit cards from some of the banks that are with us in the meeting today, and I can buy crypto. The thing is, how much do you know about all the services that can offer here? Because this is just one, but depending on how much I want to buy, when do I want to buy, you have other players in the market that will come and take your local currency, and we'll give crypto to the users, okay, for a special rate, okay. So yeah, I just wanted to clarify this, and it's very easy to do it, and the bank then is exposed. Now, once the money is here, now the question is, the money will be on my MetaMask wallet, the crypto I mean, and then that crypto I can spend it in legal but also on illegal stuff. And that's why it's important at least to know on how much you are exposed to crypto. Are we talking millions of dollars? Are we talking hundreds of thousands of dollars? So at least have maybe that first step of assessing how much crypto you're exposed to. So that would be, I would say, maybe step 2. Step 1 would be, of course, education. Having a proper, let's say, training with us, Chainalysis, and also our partners. We can train you on, the basics of compliance when it comes to cryptocurrency, but also fundamental knowledge about crypto, right? Understanding just the fundamental difference between like Bitcoin and Ethereum and other blockchains. That's a very good first step. And then we have trainings for compliance, as I mentioned. Then step two, yeah, would be, so education step 1, step 2, assessing the risk exposure. And then step 3, if you're starting to open up to having business with crypto businesses, this is where you start integrating the tools like entity risking, like the one where you can screen and address, having the investigations, and so on and so forth. But to be fair, I've spoke to other banks that are quite in the same situation as you, in the same environment, but they have an immediate need for an investigation tool because they've been seeing a lot of fraud happening with crypto, and they cannot move forward. Their investigation team cannot move forward if they don't have a proper investigation tool. So they stop at the fiat part, but they don't move forward. So I think to each bank today with us in the audience, the compliance team maturity and where they are, I think there will be like different starting points. And yeah, we can take this maybe in a separate meeting to know what's the best way to guide you. And maybe Adeji, if you want to say something here.
Yes, thank you very much. I think you've said it. Mostly, I think it's the same process we use across different African countries. So one approach that I've seen that banks are taking is that they will just say, "Oh, there's no regulation in my country, and I don't do nothing." And I think that is not the best approach to it, because again, whether there's regulation or not, it is generally accepted that your bank cannot be used to facilitate money laundering and illicit activities. And so banks on their own, Nigeria, before any regulation comes, all the banks are getting trained, all the banks are understanding the risks. In Kenya, there's no regulation. Yes, the banks, they have all gotten trained. All of them are running their risk assessment. And I think it's not going to be different from Rwanda. We're going to be doing the same for Uganda. And so for Rwanda, it's the same. I've asked around to say, how come I didn't see anyone drop the services in Rwanda? And somebody told me, oh, we don't have any service in Rwanda because Rwanda does not permit crypto. And I just laughed and I said, no, that's not correct, accurate one. I've seen a lot of them that are running activities in Rwanda facilitated by all the banks in Rwanda. I know I saw companies like Bitmama, I saw SpectroCoin. I saw a lot of activities that are happening in Rwanda facilitated by the banks. And that, therefore, I think it makes a lot of sense for the banks to understand the risks they are exposing possibly the country on. I was just reading the Capital Market Authority some documents from them that said, okay, we're doing the national risk assessment. And this also was part of our detailed discussion at the SMLAG in Nairobi. I mean in Kenya, where some of the CMA guys are saying, look, we have a lot of crypto activities happening, but we just decided to say we are not regulated and nothing is happening. But again, that is the essence of this risk assessment, to say the banks are exposed to this and the banks need to understand what is actually happening. So that when the regulation comes in, they will not find you wanting. For example, if the regulators decided to use tools to actually check, imagine we here, myself, Zakaria, Chainalysis, they say, come and help us audit our country to see how exposed we are. Every other bank will be involved. And that is why it's good that you take that initiative, our compliance officers of those banks, our risk officers of those banks, to guide them to say, this is what we think we are okay. And if at all people want to use our conduit for anything, we have done some risk assessment and we are putting mitigants to make sure we know exactly what is happening within our system. And I think that is for our first step is actually to train and get yourself acquainted to what happened, and then we can now take it off from there. I think there's also a risk assessment that happens for each bank, and I think banks that are interested, we can take those ideas and work together with us and chain analysis to actually help them do those risk assessment together with the team, and then you can have exact picture of what is really happening within your financial institution.
Thank you. I think you have answered my question, and I believe it's also good maybe to have a separate engagement, to really drill down more, to understand more, and also to see what we can do together from the heads of compliance, maybe on bank sides. Thank you.
Yeah, if I can also make one comment, just on what my colleague asked. I think also I also believe that the training parties should come first, and that's what capital market also has been doing. And even on 12th of February, they have conducted a training session to enhance the licensed players' capacity to comply with the anti-money laundering regulation. Yeah, this has been facilitated by Financial Intelligence Center. And apart from that, I think there is an invitation for comments on the draft law regulating the virtual asset business in Rwanda by the capital market. So I think a lot has been happening in this space. Yeah, and of course we need to explore more and how we can engage these other initiatives, and of course learn how other nations are doing, so that we can benchmark some of the best innovations.
Okay, Kyle is out.
No, okay, thank you very much. I was thinking you were going to be response from you or Zachariah, but it's fine.
Yeah, there was no question. I think it was no question by Eric.
No,
Eric is alluding to that fact that it's actually training that should start, and which is true. And I think the next step is to get the banks that are interested in going deeper, and of course we can engage them, and separately after this to understand how we can proceed. I've seen the request for comment by the CMA, and I think, of course, they have also carried out some national risk assessment, and so I'm going through that, and I think we also drop our comments on those ideas. So let's see how we can proceed from here with the different banks that are currently present, and we can work out how we want to work together and thereafter.
Thank you. Any other question from anyone as well? This is the question time for us to give things, questions that we are not clear about, for us to understand and also give clarity moving forward. The floor is still very much open to everybody that want to really ask some questions as well.
I think there's no question, so we can round up if there's no question.
Okay,
yeah.
Cool. So again, thank you everyone for coming to this webinar. It's been a very insightful session where we get to engage ourselves on different crypto-related activities, now specifically for here in Rwanda. And I hope to take away from this webinar, we can be able to put into action several of those talking points from here, especially starting with knowledge, education, to get to train ourselves to have the proper skills, technical know-how on how to monitor and trace all of these crypto risk activities in order to be able to have proper compliance for all of these digital assets moving forward.
Hello, Mr. Kayode.
Yes, please go ahead, sorry.
Yes, sorry for the interruption, but just to inform our participant that There is a link which has been shared for the quick survey. They can just basically also fill it even as we continue. Thank you so much.
All right. So, I mean, again, based on the conversation, it's very clear that responsible innovation and very strong regulatory framework and proactive risk management are very much essential for sustainable growth, especially for the financial institutions in Rwanda. And of course, as blockchain adoption continue to expand in different sector, I guess one thing we can do is to collaborate much more better, not only financial institutions, but also trading partners and also policymakers and even implementation partners as well, to build a very crucial, safe, secure, and a compliance ecosystem or system itself. So let's take this insight forward and engage ourselves and also reach back and fill those forms that Selway has shared. And I'm sure we can be able to have much more safer financial services for us here in Rwanda. Thank you very much again for anybody for joining this webinar, and you can easily reach out to us based on emails and also those documents shared, and hopefully we can follow up with each and every one of us moving forward from here. Thank you very much again, and have a very good day.
Thank you. Bye-bye, everyone.
Thank you. Bye.